Good evening, everybody, and welcome to our latest transition webinar designed to help secure a sustainable future for your farm business. I'm your host, Johan Tasker. When we talk about a sustainable future here at Farmers Weekly, we mean a future that is sustainable financially, not just environmentally, and that means profitable farming. In this webinar, we're talking about private money for public goods. Broadly speaking, non-farming businesses keen to pay farmers for delivering environmental benefits. And private money on top of any public money or government support is an increasingly important revenue stream for many farmers and landowners. And especially if those farmers and landowners are to deliver a resilient food system and meet the government's environmental goals. Access to the private sector will give farmers and landowners more options and build resilience within their business. This webinar will look at some of the options within private finance, as well as the challenges faced by farmers and ways to overcome them. And in detail, we're going to try and examine reviewing the farm business and earmarking assets, how to monetize those assets, be they carbon credits or biodiversity net gain or something else, marketing the assets and identifying potential private partners, and also contracts and legalities and ongoing management. So to help us do that, let me introduce our panel of experts. Ben Makowiecki is Agricultural Sustainability Director at Lloyds Bank, developing sustainability products and tools for farming customers. Harvey Davis is a solicitor in the planning and environment team at Thrings, with a special interest in solving the environmental challenges facing farmers. Sarah Belton is founder of Nutrient Neutral, helping farmers, private businesses and public organisations develop solutions to nutrient neutrality. Richard Mariniak is a partner at the Aquilite Estate in Staffordshire and director at Resets, a marketplace which facilitates nature-based trading between farmers and non-farming businesses. And Will Strong is commercial sustainability specialist at Frontier Agriculture, linking growers with both private and public funding streams. Will, I'm going to start with you. What exactly do we mean by private money for public goods?
Thanks, Johan, and hello to everyone joining the webinar today. Thanks for having me on. I think for me, the private versus public funding and sort of delivering a good, it shows a lot of similarities to that we saw in the agricultural bill that came from the government, and a lot of the aims and kind of targets that we see in that space. I think that the difference is that within the private world, I think there's opportunity to link that more with some of the sort of the traditional activities on the farm and thinking about commodity, when we're specific crops we're growing or where we've looked at stewardship. I think there's more opportunity to target it in those areas and maybe be more targeted depending on whether you're in a local area with there's certain outcomes. Maybe it's from water quality or working with a private company interested in that, or it's maybe a business on a wider scale looking at something in feed wheat, or looking at practices that go into the process of growing crops. So I think for me there's lots of similarities, but I think there's a bit more opportunity to maybe target that for specific outcomes for specific businesses within the private world.
Thanks, Will. So certainly some opportunities there. It is a fledgling market. I would encourage anybody watching to use the chat box to submit a question. No matter how basic you might think it is, no such thing as a silly question. We'd be pleased to answer whatever you would like to ask in relation to private money for public goods. Ben Makowiecki, it is a fledgling market, as I've just said. Are you seeing more interest in this kind of thing from both your farming clients and other customers that you're involved with?
In those markets, it's starting, but it's very slow. And I think, as you say, they are nascent, they are fledgling markets, but I think there is a distinct level of not misunderstanding, but the lack of understanding, and potentially a lack of trust in these markets as well. I think people are very wary about being the first into these markets and want to be able to see what other people's experiences are before they dip the toe. I think voluntary carbon markets have been around a little bit longer, and there's still some mistrust about those. We've seen good and bad publicity on some of those schemes, so I think that's probably adding to the wariness from a lot of farmers. If I could just add to Will's point as well about what is private money for public goods, I think the bit that's often forgotten, people think about the markets, but there's also finance and investment are private money for public goods. It's anything that's coming from the private sector to help achieve the ambitions of government, what the agriculture bill is trying to achieve. So that can be philanthropy, commercial investment, or lending.
And some interesting areas there in themselves, including philanthropy, which I'm hoping we'll be able to touch on later on. Sarah Belton, I'm going to ask this because people will probably have heard about things like carbon credits, etc., etc. Some people may even have heard of things like biodiversity net gain. Your specialism, nutrient neutrality, could you explain to our viewers what that is, please?
Yes, thank you, and good evening. Yeah, you described it as something else. So I think most people have heard of carbon credits and BNG. And interesting, you were saying about the Environment Bill, it's asking the question, what are the drivers for these? Now, the drivers for nutrient neutrality comes from a requirement to ensure that any new development does not increase the nitrogen and phosphorus. So it's really about water pollution and protecting really highly regarded environmental areas. So special areas of conservation or Ramsar sites or special protected areas. So in certain areas of the UK, you have to demonstrate or balance any new additional phosphorus and nitrogen into a catchment with whatever your development brings, generally sewage, that's what we're talking about. So in our area, we work out schemes to balance this. So through, for example, there's a lot of land reversion around Hampshire, where you take agricultural land out of production, or you look at sewage. There's also, with regard to livestock yards, there's a discharge from that. So the market that is nutrient neutrality and nutrient credit trading is quite new, but there are quite restricted boundaries which we have to operate in. I think some people have described to me carbon trading as the Wild West, and I think there are more standards coming in. There aren't so much the standards, and I think if you look back at the last 4 or 5 years, there were the early adopters in this, but it has been going for 4 or 5 years now, even though it's not that prevalent across the UK. Thank
you, Sarah. Richard Mariniak, you sit at this interface, as it were, between, I guess, the private sector and the farming sector, linking people together. If I was a farmer or a landowner, where should I start with all of this? What should be my first steps on my journey of exploration to try and secure some of this private money for my farming business?
Yeah, thanks, Johan, and thanks for having me on today. I think the honest answer is that at the moment, for farmers, there's a lot of promise, but not a lot of actual material delivery. And so in terms of where farmers should be really looking to engage in these markets, I think at the moment it's all about education and making sure that they fully arm themselves with all the different opportunities that are out there, because there are lots of emerging opportunities and there are lots of pressures on corporates to start to move in the direction of incentivizing farmers and delivering some of this private money for public goods. And Sarah's spoken about one of those. It could be about environmental, the government bills pressure, but those are governmental pressures that are driving mandatory markets. And those mandatory markets are focused around nutrient neutrality, around BNG, and markets that are compliant, where a contractor has to engage. Now, those will depend on the farmer's locality to those particular schemes. So some farmers may just be out of luck. They may not be in the vicinity of those kinds of schemes to engage. So it might be very well to prepare your measurements for a baseline project, but if you're not in the vicinity of a developer, then you're going to have a load of B&G credits, but you're not going to have anyone to sell them to. So I think the first place for farmers to look is really around education and making sure that they understand the different opportunities that are out there. And I think I'd like to just dispel one myth while we're here. And the myth is that there's a market. There is no market. Markets, there are a number of bilateral trades that exist, but there is no single market where somebody can engage, or a farmer can engage and come to that market and start to actually partake in that market and in a series of trades. So the first thing I would do, or we have done on our farm, is we started to educate ourselves around all the different options. And then the second thing we're doing is we're starting to baseline and really think about what do our baselines look like from a carbon perspective, from a biodiversity perspective, and that whole area of baselining has its own challenges. Maybe we'll touch on that a bit later.
Thank you, Richard. Harvey Davis, as a solicitor with an interest in this area and an expertise in this area, what sort of things should people be wary of? I mean, Richard's already mentioned that there's a lot of promise here, but not much action in some respects. What should people be wary of, Harvey?
Well, I think that the headline, probably from a legal point of view, is recognizing that these new opportunities are quite different to your typical government agri-environment schemes, which tend to run on much shorter cycles of a few years. The obligations relating to nutrient neutrality, nutrient mitigation schemes can be up to 120 years. For BNG, it'd be 30 years. Carbon, 100 years potentially, and therefore you are binding. In most cases, you're binding the land for that period of time. And I think, therefore, what many people have to consider is that this isn't just something you can hop into and then hop out of. These are very much long-term requirements to reflect the fact that in a lot of these natural capital markets, underpinned by various principles such as permanence, ensuring that these are permanent environmental changes and that they do produce genuine additional environmental enhancements. But the consequence of that for the land manager or farmer is that these are long-term agreements with very onerous legal obligations, and which in themselves, whilst that may yield a quite decent payday through the sale of your biodiversity units or nutrient credits, that could be offset by the diminution in the value of your land by entering into those obligations.
And indeed, I guess the ongoing management of whatever environmental benefits or public good you're providing.
Yes, I think, it's really important to treat it like a business in its own right, and recognizing that you're going to have those management obligations for the long term. Therefore, you do need to, when you're considering what price you may be aiming to achieve, understanding what those long-term costs are. There are, of course, the initial professional costs. You've got then the establishment costs of your biodiversity enhancements or nutrient mitigation, whatever it might be, or whatever scheme you're doing, and then obviously the ongoing management costs. Yes, which obviously all added up can be quite significant.
Thank you. Richard, I'm going to come back to you. What I'm going to do is I'm going to hop around various different panelists. I'm not going to go round and round in order, but I'm going to sort of pick and choose a little bit, but still try and give everybody a fair say. But Richard, you're saying there is no market. I mean, I guess if you're a farmer and you want to go and sell livestock, there are a number of options for you there. You can go to a livestock market. If you've got grain to sell, you can approach a grain trader or a marketing co-op or whatever. Where do you go to find this information?
Yeah, and I have to be honest, I had a bit of a technical issue and my audio just cut out.
Okay.
Question.
No problem. Bearing in mind there's no marketplace or there's no market, where do you go to start with this? I'm going to come on to the benchmarking idea in a minute for other people, but where would you go to initiate something like this?
Yeah, and I think it's a tough one at the moment, because there are some fantastic resources out there that are emerging, but I don't think there's one single source of truth. Where we started with our cluster, now we've run 3 test and trials with DEFRA, and on the first test and trial, we actually went out to explore how we build landscape management plans across our entire cluster group and catchment group. And the first thing that we identified as a priority for farmers is join a cluster, get involved with a catchment group, and make sure that you're part of a much larger community, because I think that's the source of a lot of good information. And that information is good information because it's passed down from those who have experienced it. It's not from, I mean, advisors are great and, third parties are great, but it's actually your neighboring landowners who are having similar geographical challenges that you're having. And that information is invaluable. That's the sort of information that we need to know from a farming community to understand, how is my neighbor dealing, and then how can I sort of overcome some of those challenges. So I think the first bit of advice I would say is sort of engage in the local cluster or catchment group. But there are also some fantastic resources out there that you can go and see. I mean, one that springs to mind, particularly, that I think is a great place to start actually is from the GFI, the Green Finance Institute. They've created a great model for actually helping farmers on their transition and on their journey to more regenerative or more natural capital practices. And that model in itself is a great tool that can be used and can be harnessed and will advise farmers on every step on the way. Now, it doesn't necessarily give all the answers. There are still lots of questions that need to be asked, but I think it's a great start point and is a great place to be able to delve a bit deeper into some of the challenges that farmers might be facing.
And the GFI, they do have a website, and we will try and make that website available to everybody who's logged in today. I'm going to ask the same question actually to Ben and Will, but first to Sarah. Sarah, where would you advise people start with this?
Well, for nutrient neutrality purposes, is to understand if you're actually in a nutrient neutral area, and if you just go to .gov website there and look up nutrient neutrality, there's maps there. For example, we know the Somerset levels and moors are. Somerset Council have a really useful website, exactly which areas are in and which are out. If you're actually wondering what sort of mitigation scheme would be feasible or not, there are a number of consultants or even land agents that you could go to. People like myself, there's only a handful of us, if I'm absolutely honest, that really understand the application, but we are out there, so a search would certainly be advisable. And for BNG, that obviously covers the whole country. We work with a number of ecologists doing joint schemes, because it is actually something you can stack, is nutrient credits and BNG, but you can't add carbon in. So going back to what Richard was saying about, understand the markets, it does need a lot of ears and eyes out, I think, to really understand what you can and can't do. But BNG, I think there's a lot more people out there who understand BNG and how it can be applied. So that's how I would advise. Carbon, I can't comment on.
Sarah, thank you. Will Strong, where would you advise people to start?
I think from my perspective, we start to look at the opportunities that actually lie within supply chains and within some of the the grey market opportunities, and looking at some of the private interest to get closer to the farmers that are actually growing the produce that ends up with them. So there's quite a few examples now of across a range of merchants of opportunities to look at how farmers can be linked with funding for certain practices that look at some of those environmental outcomes that would fall within that natural capital. So I think it's start to explore that with some of the, your normal, merchants and advisors that you deal with, and you'll start to find out about that. I always encourage people to get involved in their local farming cluster, and I've used, there's a farmingcluster.com that there's websites there that allow you to look locally as to what farmers within your region are doing. If there's a farm cluster, kind of how you can get more involved. So I think it's building on from what Richard, it's looking at what you're doing, what's going on in the local area, because grouping together with other farmers that are in the same geographic area that could deliver on a larger scale is really important.
And that is important, isn't it? There's that not only sharing knowledge and sharing the opportunities, but there's by working together, groups of farmers on a landscape scale can deliver bigger benefits, and also because they're going to be more attractive to potential investors, because you only have to deal with one group rather than lots and lots of small growers or livestock producers. Ben, how about yourself? Where do you signpost people to if they come to you?
Yeah, so funnily enough, the first two things I wrote down were the GFI farming toolkit. I think for a general look, as Richard said, don't expect it to be able to point you to exactly what's going to work for your farm, but for a general look at the markets, that's really important. Clusters, again, I'll just reiterate what Richard and Will said, really important. And I'm going to make a plug for one of our partners, Soil Association Exchange, have a funding page on their website, on their toolkit, which allows you to look at what public, private money is available for various changes in practices or whatever it is you'll want to look at, growing hedgerows, woodland, etc. Looks at private money, public money, subsidies, grants, and importantly, allows you to see what is stackable. Sarah was talking about earlier, what can you stack? Because that's really important. You don't want to jeopardize your SFI payments by doing something that will that you can't stack against them.
And when you say Soil Association Exchange, people will probably hear that and think, oh, that's for organic farmers. Soil Association Exchange is not just for organic farmers, is it?
No, it's not at all. No, so Soil Association Exchange is a separate business from Soil Association. It has come out of the Soil Association, but it is for all farmers, and it's something that we've been a partner of that we've been working with for 12 to 18 months now. Richard mentioned earlier about baselining. Essentially, it is a baselining tool that allows you to look at not just carbon, but biodiversity, water quality, animal health and welfare, soil health and social impact, and then helps you benchmark that against other people that have used the tool as well. They're growing significantly, covering the whole country. We've got nearly 1,000 farmers on there now, covering about 150,000 hectares, so it is growing significantly.
Thank you, Ben. Thanks. Harvey, I'm going to ask you the same question, and then we're going to look into this idea of baselining and go over to some of the questions from attendees and people who've submitted questions for the panel. So, Harvey, where would you advise that people start? Clusters have been mentioned, so have various other places.
Yeah, clusters. I mean, some of the government's web pages, I think, are pretty useful as well. Then pretty easy to understand. Of course, there's the Farmers Weekly, Johan. You shouldn't forget. But often I find that I know Sarah indicated about sort of things like nutrient neutrality can be quite specific locations. Often, that local knowledge is quite useful. So possibly, there might be agents in particular areas who are, well versed in that particular area in terms of this stuff, and therefore, well placed to advise. And I think still at this moment in time, that local knowledge is still very useful.
Thank you. Thanks, Harvey. A question here then from Caroline Hamilton. We've spoken about baselining, etc. She says, is there any funding available for benchmarking? Is this something that you have to do yourself, or can you claim some sort of funding for it?
I'll be coming there. For BNG, I'm not aware of anything. I think the onus relies with you. As a general kind of cost, it can be anywhere kind of 2,000 to say 13,000 for an assessment, depending on how big you're looking at and what size it is. And generally, the requirement of format is fairly standard of actually what is achieved, the baselining of that.
So quite a big variation in cost there. Is that purely to do with size, Sarah, or is that to do with detail?
What size you're looking at, and how complicated it is, what area, what you've already got. You've got arable, you're on grazing already, and if you're in an area that's really beneficial to very desirable habitat, for example. If you're looking at there is BNG specifically for water-related credits. It's much harder to generate them. They're very complicated, I think, the assessment, but the reward is quite significant. Again, obviously, you just have to have a water course going through your land. Yeah.
Richard, do you look like you're going to say something?
I was just going to say, I think there was some funding that was put aside a few years ago by the government to help local planning authorities with baselining, but I don't know if that trickles down into farmers. I think they probably baseline for their own benefit and then go through the trades themselves.
So perhaps see that sort of initial chunk of money as an investment rather than a cost. Yeah,
that's right, and that's the view that we've done on our farm.
So Richard, exactly. Sort of what are you involved with? Just flesh that out a little bit. When you say your farm, what are you doing, and how does that work briefly?
So on the BNG side of things, we're at the very early stages in just exploring how this might work for us, and we've identified a few sites, but we haven't. Which is why I mentioned this earlier. We haven't actually identified any developers that might be interested in buying units, and so we don't want to go too far down the road of actually incurring the costs of baselines, incurring the costs of the plans until we identify a buyer. And as I said earlier, because there's no market, we would still have to negotiate, or our third-party intermediary would still have to negotiate what price we would get for those units. Now, there are some benchmarks and indicators, and the government have set some phenomenal prices for sort of, I think, price of last resort at 46,000 per unit. But that depends where in the country. That's not a blanket all. It's a really misleading figure actually, because that might be fine in the south, but actually, if you're not in or close to an urban area, you're not going to be getting anywhere near those sorts of figures. So the point that we're trying to what we're trying to understand is, do we have a relevant project that is going to be of interest on suitable land that would marry a local developer where those BNG units would be valued? That's the first question we're trying to understand. And then secondly, how do we go about negotiating a price for those BNG units? Because we're not, we've got a good team and we're smart cookies, but we're not negotiators. We're going to be dealing with who are we dealing with? Some of the big developers in the country. Are we armed and equipped with the legal teams, the resource that they have? No. So we're going to be trying to have these negotiations in a completely unbalanced scenario. And who's going to lose? I'll tell you who's going to lose: the farmer. We're going to lose. So I think we're trying to understand, first of all, are we in a region where those BNG credits are valued, and then how much cost do we want to incur once we understand that, and then secondly, how do we go about the negotiation of that process?
Does anybody on the panel have expertise in this area, Harvey? I mean, in terms of negotiation, it's a complicated area. People are going to want to be looking to experts, aren't they?
Yeah, I think obviously BNG, we are at the very beginning, and I think inevitably, in terms of the BNG requirement on developers, it kicks in on the granting of planning permission for an application that was submitted for large development after the 12th of February and for small development after the 2nd of April. So developers aren't really having to come to the market until they've got a planning permission, and then they need to discharge the biodiversity gain condition. And it may well be that we won't really see that developer demand until later in the year. And I think the thing about, developers do tend to move only when they really have to. And we saw that with nutrient mitigation. So there's actually a lot of nutrient credit trading going on now, but that wasn't that long ago where, that there was very little. Developers were just sort of waiting. But that market has begun to flow. And I think you're right, and obviously there are, lawyers and agents who advise on this stuff regularly, who can obviously provide that guidance. Ultimately, because these are compliance markets, those developers, they've got to discharge these requirements. Otherwise, they cannot get on with their development. And that is proving to be quite a powerful driver. And those, farmers and land managers that, particularly in the nutrient mitigation market, moves quite early, did yield very substantial rewards. And there are still very decent rewards as well for the right schemes in the right places. I think in terms of BNG, it will be quite localized because it's a market. It'll be supply and demand, and if you're the only one that's supplying them, developers in that particular area, then even if there's not a lot of development, then you might do quite well. But it's obviously impossible to understand the entire picture of supply and demand because you don't know what all your other landowners are doing and exactly what the developer demand is going to be.
Thank you. Thanks, Harvey. Well, you're nodding a little bit. What are your thoughts on this?
I guess as things develop, it's hard to know where it's going to go, doesn't it? And I think it sort of going on from what Harvey was saying in sort of a localized piece is that could be the same if you're looking at opportunities that fall within supply chains, is in the same way that, you know, certain wheat contracts will be available in certain areas to certain homes. For me, you know, I see that the same with some of the natural capital opportunities connected with the produce that farmers are actually creating will be once again geographical and connected in certain regions. Because, you know, if we look at some of the work that Frontier's done within this with some of, you know, the business in the supply chain and farmers, you know, there's certain targets in certain areas that are trying to link farmers together that might just not be available in others. But I think until it becomes more established, it's hard to know what that perfectly looks like because it's all a bit unknown.
Thanks.
I think.
Sorry. I'll take Sarah first, and then and then you, Ben. Yeah.
I was just going to chip in very briefly and to say that there are trading platforms which can help marry up smaller parcels of land. And if you're lucky, yes, you'll connect up with a larger developer. And if you're really lucky, they might even pay for your baseline study. But there are trading platforms which can help. If you just have a few parcels of land or a few units, you can be married up in that situation, which is an option as well, rather than having to go out and make those contacts yourself.
Thanks, Sarah. Ben.
Yeah, I was just going to come in and say I think people do need to be realistic about what the demand is going to be. I think a lot of farmers think this might be a silver bullet. It's going to make a lot of them very, very rich. But actually, we've been speaking to a couple of land agents who've been saying, based on the current rate of building and the rate of or the amount of biodiversity net gain that's being done on site, which is on average has been as high as 75 or 80%. It means that actually the demand for doing it on farm is probably not going to be much more than 300 to 400 hectares a year across the country. Now, it's not a huge amount. So I think people who think that there's going to be thousands of hectares put down to biodiversity net gain and earn, you know, the £46,000 a unit that Richard was talking about, it probably isn't going to happen. So, and I think until we understand what that demand is when the rules come in November, you know, it could put a bit of a dampener on the pricing.
Yeah. Okay. Is that what are other people's thoughts on that? That maybe it's not going to be the panacea that some farmers and landowners think it might be, and indeed, yeah, we're often told by the government that this is going to be a big opportunity, presumably because if they can steer people in the direction of private money for public goods, then they're going to not. Well, it's a good way for them to wash their hands of putting so much support into the industry themselves in terms of public money. Harvey.
Yeah, I think. Well, obviously, yeah. I mean, obviously, the government has got a number of key environmental targets, you know, set out pursuant to the Environment Act, and it obviously is keen to be seen to be hitting those. I mean, I'd echo Ben's comments that, you know, is it a silver bullet? You know, I wouldn't be wanting to put all my eggs in that particular basket. I think where I've seen it working quite well so far is where, you know, there's a farm holding and it's a very discrete element of the farm. It dovetails with the rest of the farming enterprise, but it's not all in. It's not utterly dependent on, you know, saving the farm business on that BNG scheme. I do think it will be just quite, you know, particularly in the early time of these markets, it will be quite volatile, and I think there will be, you know, opportunities, but also there will be times when it's probably not so good. But I think the other thing is that what we do anticipate is that whilst the mandatory BNG market may not be may not be the panacea silver bullet. There are in the offing, and perhaps a couple of years away, other voluntary biodiversity markets that will be coming through the system, which might provide additional demand, which therefore provides greater incentives. And we're at the sort of beginning of this journey, and I think there's we're going to see a lot more creativity and a lot more development in this whole area. And again, impossible to predict, but it certainly there could be other opportunities coming down the track.
I don't want to get sort of hung up on BNG for the whole of the webinar, but there is a question here, Harvey, and just to stick with you for the moment, from Ben Smith: how to value offset BNG credits when approaching developers, the cost versus the benefit for a small development, well, 6 to 12 hectares, it says here. What are your thoughts on that?
I think the issue with smaller areas for BNG is that there are a lot of costs associated with this, and then I think that really does put quite a lot of pressure on the viability of these schemes if you've got a relatively small area of land. Again, subject to all the stuff that we've been saying previously, and I've also come across instances where, particularly, it seems to be with landowners with small areas around, where they're sort of entertaining arrangements with a third-party operator, a promoter, or something like that. And again, that just adds to the complexity. And I found that those kind of schemes, they haven't necessarily progressed as quickly as others. And again, bringing further pressure on the viability. So I think that I don't know, but in terms of valuation, again, I mean, I'm not the person that does the valuation. It is very difficult at this stage, I think, to value it. It will come down to supply and demand and working your way through that once the developers start coming in to purchase these units. But what that looks like is probably be for somebody else to say.
Chip in there.
I was going to, do Sarah. Well, I was going to say, we do as an industry sometimes have a tendency to undervalue what we do, and add a little bit onto the cost of what we're doing, and make a profit, rather than recognizing the value of what we're doing to somebody else.
Absolutely, I think exactly. If you're thinking, well, I'll reseed my cereal field to grass, it would have little value to you, but actually the enhancement that you're creating there for BNG is significant. Speaking to a colleague who does trade in credits, her valuation is around 25 to 30,000 per unit, and you would expect to, so taking a hectare out of cereal, achieve around 6 units for that hectare. I think it's important, we're talking about value and actually cost and input, and to understand that there are different models for generating such credits. You can do it all yourself, you can invest that money, have the baseline, and then as Richard is, look for a developer to buy it. There are other models whereby companies will either lease the land from you and you get a percentage of that, and if you want, you can be paid for managing it as well. Others actually buy that land outright and just say, well, take that land and we're going to create credit and habitat on that. So I think it's important to consider as well what model suits you, because different horses for courses, isn't it?
Ben, thanks, Sarah. Ben, Sarah's just mentioned, I think, if I heard you right, Sarah, 6 units per hectare at 25 to 30,000 pounds per unit. People are going to be seeing pound signs, but there's going to be a lot of caveats with that kind of money, isn't there, Ben?
Yeah, and I've already said it. It's going to come down to supply and demand, until the builders start building and start understanding what they need to do off-site. We don't know what the demand's going to be, and if we are talking about 300 to 400 hectares a year as a percentage of UK farmland, that is an awful lot of supply and very little demand. So I think the markets will sort themselves out, but how quickly, I don't know.
I'm going to go to Richard and then Will, and then I think we'll probably feel free to move on from BNG if you would like. I'm particularly interested in the philanthropy angle, which to me suggests that it might be a little less onerous for for farmers and landowners in terms of providing a public good there. What do you think to that idea, Richard?
Philanthropy money coming in to fund the transition to a more regenerative and environmentally friendly.
Yeah, I think so. I mean, if you look at something like BNG, it might seem like an easy win, but the more you look at it, the more onerous it can be. As Harvey said earlier, these agreements are long-term, often sort of 30, 35 years. You've got all of that management cost. It's not just going to be, it's not money for nothing. But something like philanthropy, could it be a little bit of an easier, albeit less lucrative source of revenue for a farmer?
I think there's some money, some short-term money to be made now, I think, as Harvey points out, and as has been made in certain areas in the nutrient market. But that all depends on your geography and the lack of the draw of where you are. I think there's a much bigger opportunity coming down the track, which philanthropic money is great and helpful, but that type of money is in no way going to help us get any closer to our 2050 target. We've already seen Scotland renege on their commitments. We're not getting any closer to the actual end goal, which is how do we actually deliver environmental change. And whether it's philanthropic money or whether it's small pools of money from corporates donating to be seen to be doing some sort of a public good, that's not enough. I mean, I firmly believe that there are some drivers in the market that are going to compel all organizations to act. So the new TCFD regulation and the recent TNFD regulation. So TCFD is the Task Force for Climate and Financial Disclosure, and the TNFD is the Task Force for Nature-Based Financial Disclosure. And what these do is they mandate the largest organizations out there to disclose their environmental and their carbon footprint. Now, all they're doing is they're disclosing those. They provide a framework for how to disclose their harms or their carbon emissions and their nature impacts, and then those organizations will have to disclose them to their stakeholders, to their shareholders, to their customers, to the government, to all and sundry. Now, what that's going to do is it's going to show us who the good actors are and who the bad actors are. So if you have one telephony company delivering abhorrent abuse of nature in their supply chain and in how they behave, and you have another telephony company actually investing a lot in nature, but the price of the contract is the same, your choice is going to be relatively simple as a consumer. You're going to choose the one that's doing the right thing for nature. And I think the future promise for farmers is a real way up of, is their land making money and a material difference to food production, or are they just really scratching a living because they've been doing it for a long time? And there are a lot of farmers who are going to go out of business over the next 4 years because of the lack of the subsidy that's going out that we're losing and that funding gap. And I know the government are looking to fill that with BNG and all the other schemes that are out there. But I think there is a real need for corporates now to step into the farming and to the landscape and to the environment and actually start to say, yes, I am making a nature commitment, not because I think it's philanthropic, not because I think it's good, but it makes good business sense. Not only if I'm a food business does it ensure my business continuity, which is great, and I need to do that. I need to make sure I've got enough harvests, coming out for the next 20 years if I'm a big food manufacturer and I can fulfill that demand. But it also makes sense if I'm a technology company. We've seen Microsoft invest billions in nature schemes in America. We've seen Apple lean in. We've seen Stripe lean in. We've seen all the big technology companies invest a lot of money in schemes in Australia, in New York, in Canada. Now, there have been mistakes along the way, but I see that as the real opportunity for farmers and landowners. Now, there is a food security balance, but I don't think it's an either or. I think we can farm environmentally, deliver food, and deliver public goods. And I think when the corporate world starts to wake up, and we've seen some instances, Aviva recently, I think, spent 36 million on the restoration of an Atlantic rainforest in the UK. Why are they doing that? They're doing that because it's great PR. It's a great story. Consumers will feel good and hopefully buy their insurance with Aviva. We're seeing other brands start to do that as well. So once nature becomes the center of business strategy and a reason to engage, then I think we're going to have real significant shift in our targets towards 2050.
Thanks, Richard. Will Strong, you work as part of Frontier's Sustainable Crop Production delivery team, you link growers with both private and public funding streams that support sustainable farming practices. What's your experience of this, and what Richard's saying and others are saying?
Yeah, so I think, at that broad level, it's all about optimizing crop production alongside delivering the increased environmental outcomes that society is looking for farmers. So I think the massive opportunity is to be able to continue to, once again, use that word, optimizing crop production on the areas that are producing, and looking at either in crop or out of crop areas that actually, in sort of managed conservation can also deliver as much. So I think, leading on from Richard's point, there's really good examples, I think, that we've been involved with and working towards, of some of the large corporate businesses, and not just food companies, that are wanting to invest in their supply chains a lot more in a really genuine way, on top of meeting some of their supply chain emission targets, or the own targets that those businesses have set, or some of the governmental requirements on some of those reporting structures that Richard mentioned. And we're starting to see the other end of the supply chain that would not necessarily have always been as close to the farmer as possible, or wanted to be as close, now becoming much more interested and having much more financial interest in supporting both the businesses close to the farmer and the growers themselves. So we work within a large scale project that is now across Europe, called the Landscape Enterprise Network, or LENS, and that's a group of businesses from across both food production and wider industries that are using that mechanism to pull money together to be able to funnel that down to farmers looking at more sustainable practice, or farm system changes, or assisting farmers in looking at, more greener versions of fertilizer, or looking at improving efficiency, or understanding how we can look at carbon reductions in supply chains, and seeing real genuine financial support from that in the long term. And I think the opportunity there is, obviously, we speak about B&G and nutrient neutralities and some of these very specific examples that potentially have a very high income generator on the right farm. But I think the wide scale opportunity is to incorporate some of the sustainable practices into farming systems, and the way in which you can optimize crop production alongside that, to see reward in kind of traditional food production. So you're being able to balance the food security element and continuing to farm, with also tailoring some of those practices, some of the outcomes that the supply chain is looking to sort of add value above and beyond what you're already doing. And we've seen there's good examples of that, and we're just starting to see that come through with lots of different businesses.
Thanks, Will. It's not about greenwashing. It's about actually doing stuff and doing the right thing, and that's going to have benefits for the investor, and it's also going to have benefits for the farm, for the landowner as well. Sarah Belton, what are your thoughts?
My thoughts were someone's running up the stairs and going to burst in at any moment, if I'm absolutely honest. Could you repeat that?
I was saying it's not about greenwashing. It is about doing the right thing. It does have tangible benefits, but it also has benefits for the investor, and it also has benefits for the farm business, for the landowner. And in terms of nutrient neutrality, I was hoping to get your thoughts on that, and things like phosphates, etc.
I completely agree with what Richard's saying. I think that corporate responsibility is what is coming down the road. It's not quite there yet. I think with nutrient neutrality, there's a really key distinction between just balancing the new impact and what's already there, so it doesn't worsen. What we really need to look at from the environmental point of view is restoration, and not damaging it any further, which is that's where nutrient neutrality cuts off. And I think Will mentioned about greener fertilizer. That is absolutely where investment should be from both environmental point of view, is that to look at reducing those losses, because it's the right thing to do, and that's what people should be investing in, and not just necessarily the drivers, because the government says you have to do that now.
Thanks. Harvey, you also have some expertise in terms of nutrient neutrality.
And I was actually just making a slightly different point about, I think, going back to what Will's point about LENS, and those schemes I think are going to be very interesting, driven by corporates looking to invest in those improvements on the ground. I think one of the challenges with a lot of natural capital markets is this requirement for these really permanent long-term changes, and how you mix that with farming is probably quite challenging. Whereas I think some of that these newer initiatives coming down the track, Richard mentioned the task force on nature-related disclosures. Will mentioned Lens. Those schemes could, be the thing that helps bring, about more sustainable farming and those environmental improvements. And it's not just environmental improvements for the sake of environmental improvements. It's cleaning our water, making our air better, improving the soil health, and all of these things are incredibly important to day-to-day life anyway. So. Significant opportunity there to bring about that change. Yes.
Thank you. Ben, would you like to come in on this?
Yeah, it's a really interesting area, something we're doing a lot of work on them at the moment. Richard rightly mentioned TNFD, TCFD, those financial disclosures of what carbon your supply chain is emitting, what nature loss you're causing. The majority of the corporates now have also signed up to SBTI, the Science-Based Targets Initiative, which takes it that step further as to what actions they're going to take to improve things. So all these regulations do mean that corporates are one of the reasons that corporates are creating targets for emission reductions and improvements in nature and biodiversity. There's also shareholder pressure, customer pressure, consumer pressure, and, as you said, a desire to do the right things. And maybe that's where the philanthropy bit comes in the UK. I think in the US, individual philanthropy, the billionaires putting money in, Bill Gates, etc., whatever you think of their reasons, is perhaps more common, but we don't have that in the UK. So philanthropy does come from corporates. We've just put some money into the Projects for Nature scheme for DEFRA, 3 projects, including one that's creating a nature corridor through from the Sussex Downs down to the coast, one in Cumbria and one in Yorkshire as well. So that's an example of corporate philanthropy. We're not getting anything out of that. It's just money put in. It is what we are getting out of it is PR. It will please our shareholders. Hopefully, it will please our customers. But another project that we're looking at, going on from what Will was talking about. Yes, a lot of corporates, a lot of the supply chain actors are looking to put money to farmers. We're putting together a model based on the premise that those who benefit from improvements in sustainable farming, from sustainable practices, should pay the farmer to reward them for doing it. So a lot of the businesses are doing what Will's talking about, linked to crop production and sustainable practices, but in a lot of cases it's single crop for a single year. What we're looking to do is help those supply chain actors pool their money into a marketplace that farmers can be paid out of, but paid for longer term, 4, 5, even 10 years, done on a whole farm basis, and the corporates benefit because they're reducing their scope 3 emissions, the emissions that come from their suppliers, and the farmer benefits because they will get some hopefully payments that will be enough to motivate them to make those practice changes.
Thanks, Ben. And this is a Farmers Weekly Transition webinar, and this sort of stuff that we are talking about will be covered in the next issue of the Farmers Weekly Transition Supplement, which is a week tomorrow. It's on the 26th of April, and we will be looking at the opportunities around this, including the task force on climate-related financial disclosures, which is the TCFD. There seems to be a growing school of thought, I guess, Richard, that this sort of stuff we should start to see this. We should look at this as being an opportunity for farmers rather than a threat. There are opportunities here in terms of things like TCFD and carbon footprinting the supply chain, etc., etc. It's not just necessarily another thing for farmers to do without any reward. We should perhaps look at it in a slightly different way, more of a positive perhaps than a negative. And indeed, if we don't, other countries perhaps will.
Completely agree. And I think the remarkable thing is that so many farmers over the last 100 odd years have been looking after their land, have been putting trees in, building out little ponds for free. They've been doing it because they felt that that's what the land needs and that's what's required of their particular landscape. There have been some bad actors, admittedly, but the vast majority of farmers that I talk to and the generations of farmers that I've spoken to, sort of my uncle's age and older, sort of in their 70s and 80s, yeah, they've done that because they love being on the land and they love nature. And I think the opportunity is that the world is finally waking up, that it can't go on degrading the environment. And I know farmers have been on the front line. I know that there was a big shift after the war to use vast amounts of fertilizer, and we had to grow and we had to produce. But now I think there's a shift, there's a movement, and that movement is around more environmentally friendly farming. That movement is around valuing the input that farmers are putting into the land, not only for the protection of their soils, but also for the protection of the air that we breathe, for the protection of the water that we drink, because it's all connected. You know, nature doesn't stop at the farm boundary. You know, if my farm was polluting and I'm not polluting, if my farm is using fertilizer and I'm not using fertilizer and I'm lower down the catchment, where do you think all that fertilizer is going to run off to? It's going to run on my land. It doesn't matter what I'm doing. And so the point is that the opportunities here are huge. I think they're only huge if farmers can get organized and work at a landscape scale. I don't think that they're huge if farmers stay isolated, stay secret, which has been the which has been the modus operandi for the farming community for many years, not share, not get involved, not engage. I don't think the opportunities are huge. I think they are big on a landscape scale. I think the word will be collaboration, and I think catchment groups, cluster groups are the key. There are some great initiatives out there that are starting to bring farmers together. I mean, I'm on the steering committee of our farmer cluster group, the Aquilate Mere Farm Cluster. But there are some great initiatives out there like the Environmental Farming Group and others that are trying to bring farmers together to actually deliver some of these benefits. And if farmers can come together, the impacts that they can deliver on the environment will be so much greater. And the value to corporates, as corporates are starting to wake up, will also be so much greater. So I think the returns to farmers could be great. And I know that's a lot of promise. I know that everyone's been promising that for the last 12 months, 24 months since I've been looking into it. But there is a movement and there is a change, and it's going to happen because we need sustainable food. We need to look after our landscapes. Otherwise, we're not going to be here.
Thanks, Richard. Will, what are your thoughts? I mean, we talked about clusters. We talked about things like lens. It is about working together increasingly.
Yeah, I think collaboration is a word we use in Frontier all the time, and great to hear Richard say it, because that's exactly what it requires, and it's that collaboration where historically maybe it was a bit more isolated. You know, if that's collaboration with, you know, looking at the way in which you are, you know, planning rotations and where, you know, the products that you're growing end up, it's linking that more together, so that I can't remember who mentioned it earlier, but rather than, you know, year on year isolation, it's thinking about how we maintain that over a farm rotation. And, you know, it's not necessarily having huge long contracts of commitment that are 30, 40, 50 years, but it's creating a way in which farmers can be supported to make these decisions over a whole rotation, and also to never undervalue the fact that all of this builds resilience into a farm. You know, with my agronomist hat on, you know, anything where you're already building soil health, you're building resilience into your soils, you're thinking about optimizing what you do, efficiencies, you know, that all brings a benefit to you. And if you can, you know, work with others, work within schemes to see an additional financial reward for that, well, it's a double win for the farmer, for me. And I think also, you know, the great opportunity as well, and we use lens as an example, but is the, you know, the opportunity to come together more maybe than you historically have, for that kind of peer-to-peer knowledge and being able to talk to others who are already, you know, on the path to look at practices that, you know, maybe more, you know, deliver more environmentally than some of the others have historically, but being able to learn from each other, kind of create those networks that help benefit, you know, individual farmers, bring them together, but then overall it benefits all of us, because we, you know, we get more out of everything, really.
Sure.
Can I come in there? I think also to talk about collaboration, to look locally at your wildlife trusts, your rivers trusts, And there are obviously money from like utility companies, and they run their own catchment groups as well, so that we collectively look at soil and water together. So I think it's not just, you know, farmers on their own in clusters, but to bring in that local knowledge too is really important. So
thank you very much. I'm just looking down here at some of the questions that have come in. Harvey, I'm going to ask this one of you. How should landowners best protect themselves against challenges around permanence and reversibility over the long term? Is that something that you could answer? Sorry to just throw this at you.
Yeah.
So,
no, sure.
Yeah.
Well, I mean, ultimately, it's a matter of decision for each farmer and land manager. You know, if you've got the opportunity to enter into a nutrient mitigation or biodiversity or a carbon scheme, which is going to require those obligations for long term, I think you can't avoid that if you're going to enter into those schemes. It may be that if you want to do something a bit more blended with your farming, that, you know, as we mentioned earlier, like the lens scheme and some of these other ideas, or agri-environment schemes that have been provided by the government, might just be something that would suit your requirements better. I think the other thing is as well, it is quite interesting, some of the work that we've done, you know, around things like HS2 mitigation and so forth, and thinking about when these obligations are imposed on land. It is just worth, though, when you're going through that process, thinking about what possible residual uses of that land can you achieve. I mean, nutrient mitigation is quite an interesting one, where, you know, often you were taking out a farming enterprise, but if you can maintain in some shape or form the agricultural use of that land, that is quite useful potentially from a tax point of view, but also other uses. I mean, increasingly there's going to be a greater social need for a lot of these types of environmental improvements, whether that be social prescription and other recreational activities. I mean, there's one of the markets has been suitable alternative natural green space, which is about providing additional space for recreation to alleviate the impacts on protected sites. A bit like nutrients, same regulations, but just a different type of impact. But just thinking in the longer term, just what are the potential residual uses of that land, and how that might marry up with the rest of your farm enterprise. If you're really dead against those long-term obligations, then you need to consider schemes where you're more like your agri-environment schemes.
Thank you very much. Just to read out a couple of, a website address here. Sarah Moran from Cumbria Wildlife Trust has sent in the website address for the Green Finance Institute, which is greenfinanceinstitute.com, which we were mentioning earlier on. So thanks, Sandra, for that. The question here from Simon Barker: have you got any recommendations for how to budget for any of the management agreement obligations under BNG? I know we're back on BNG again, but over a 30-year period or longer. Is there a way that you can do that? Would you like to look at that one, Sarah? It's a difficult question to answer, I know.
Yes, I can't answer that really. I don't get involved in the actual management planning and understand what that involves. I work with ecologists who do that aspect for me, so I can't really comment on the actual cost of that over a 30-year period, I'm afraid.
Okay. Can anybody comment on that other than to say it certainly should be taken into account, because there is going to be a long-term management cost in a lot of these cases?
Well, I would just simply say that, you know, there is some government guidance on that particular question, and then following that, you know, it's the kind of thing you probably want to sit down with your land agent or another expert to really work through and work out those costings over the 30 years.
Thank you. Anybody else with anything on that? Just to say, the whole subject is, I mean, there are obviously opportunities here. The whole subject for a lot of people will seem daunting. For others, it will seem like a huge opportunity. But I guess the balance, the truth of that is going to be somewhere in the middle, Ben, as you sort of alluded to earlier on with things like BNG and the amount of land that will involve.
Yeah, absolutely. I mean, it is daunting without a doubt, and I think that's because, as we were talking about earlier, it's nascent markets, it's not new stuff, and lots of people just don't understand what it's going to consist of at the moment, and as you say, how much demand there's going to be, and how much supply is going to be needed. So, yes, I completely sympathise with them, with anybody starting to look at these and feeling overwhelmed. As I say, I think that there are other opportunities for private money, for corporate money to come in and help farmers, encourage farmers to take up more sustainable practices without the need for these markets. They are just one part of the private money for public good. So hopefully there will be an opportunity for everybody. It's just finding what that may be.
Sure. Thank you. Will, I mean, in terms of that, in terms of more sustainable practices that farmers can be rewarded for, in other words, continuing to farm rather than doing something that other than farming to generate income. If people say, well, I actually like farming, I don't want to be doing all of this other stuff, but I still would like some of this private money if I'm providing a public good, what could I be rewarded for as a farmer in terms of farming itself?
Yeah, well, I think the key thing always is giving farmers the opportunity to kind of pick and choose any practices or any, I guess, anything within crop production that is suited to their farm, because not everything is suited to everyone. We have different soil types, you have different climatic areas within the country, so it's key to always have the freedom to build a sort of a unique package of potential options for your own farm. But when we look towards some of the things that are rewarded, we look at things like, where is appropriate use of cultivation? Is there opportunities within certain crop rotations to think about level of cultivation, because of, we know the benefits that brings to, carbon sequestration and reductions in a crop. Is there opportunities to look at alternative sources of fertilizer? So whether that's some of the natural biological fixation opportunities that there are now, where you can look at swapping in organic fertilizer for that, or actually is that looking at the way in which that fertilizer is made? Is there opportunities to make use of, and we hope to see that things like green ammonia coming through in the future, and done a lot of work with some of the major fertilizer companies at looking at how farmers can embrace that. And that's where some of that, I think, private money can be used to help support farmers with, where there's maybe a price differential or there's a cost incurred, supporting them to be able to make use of that. But actually, is it just thinking about the farm at a larger scale? People always talk about, growing cover crops or catch crops in rotation. It's all of those options that could help build towards some of those environmental outcomes. But the key thing I always think to remember is, if you optimize crop production and you're making the best use of any of the inputs that you're using, then we see the best outcome anyway. So I think it's that balance around, what can you look at your farm, what suits you, where are the changes that can be made that don't necessarily start to collide with high quality crop production, but also deliver some more of those environmental outcomes. And a lot of those practices are quite accessible, and you don't have to do everything at once. It can be a balance, and you can look at things in stages throughout your rotation.
Thank you. Richard, what are your thoughts in terms of continuing to farm but still delivering benefits, which public benefits in return for private money?
I think that and you have to forgive me because I can't actually hear a thing that Will said. So if I repeat what Will said, I'm sorry about that. I haven't heard anything.
It'll be a case of great minds think alike. So
fingers crossed.
So I think we need to be in a position where nature and the environment is priced into the model and not just prized. And I think at the moment we are prizing nature, but not pricing nature into the model. And if we look at how a lot of the buyers are out there, whether they be supermarkets, whether they be other processing plants, buying produce from farmers, they are not pricing in the carbon, the biodiversity, the nature benefits. They are saying, we would like you to deliver against those credentials, but they are not necessarily pricing in the fair price of the carbon that's being sequestered on that journey if the farmer has changed his practices or her practices to a regenerative system. And I think we need to move to a system where actually those environmental benefits are priced into the value of the produce. That's where I think the potential lies. And that doesn't necessarily mean that supermarket or that processing plant needs to fund all the cost. There could be some extraordinary partnerships that occur where those organizations partner with telecommunications companies or partner with technology companies to fund that and actually take the benefit. So I think the model needs to change where we are pricing the cost of the environment and the preservation of the environment into the produce that farmers deliver. And that's where I think the real opportunities lie.
It's pertinent that you've said that. We have a comment here from Anna Beams from Suffolk FWAG, Farming and Wildlife Advisory Group. And she says, Anna says, true cost accounting or paying the right price for food would address multiple issues relating to value for both human and environmental health. She says, private money markets are complex, and the best advice, she says, to farmers would be to use this period to invest in whole natural capital evaluations, in other words, a plan. And the trade-offs need to be ranked according to individual farm context in order to assess the right opportunities. But fundamentally, I guess, Richard, exactly what you've been saying.
Completely. And I think there's a role for government here. The role for government is to help in that transition and fund the shortfall. If there is a shortfall in the actual cost of carbon, or the cost of nature, or the cost of BNG, or the cost of biodiversity being paid for because the corporate won't pay for it or can't pay for it because the consumer is not in a position to pay more for it. So I can understand the buying. The government needs to step in and say, actually, that's what we'll fund. We'll fund that difference. We'll fund that shortfall. But we recognise the true price of carbon being delivered. We recognise the true price of the environmental benefits being delivered.
Ben, what are your thoughts? There seems to be a consensus, I guess, that we need to be paid as an industry, or farmers and food producers need to be paid, or they need to receive a fair price for what they are delivering, not just the food that they produce, but the way in which it's produced and the broader and wider benefits that brings.
Absolutely, and I'll come back to my comment earlier that those who benefit should pay. And that's fundamental to this. The interesting part is how that's done. Pricing in that cost of nature, or the price of improving nature, isn't going to come through increased food prices in the supermarket. The consumer can't, or in many cases, or won't, but in many cases can't pay. So it's how it's priced in. If it were priced into the cost of food, we wouldn't need to be worrying about the private money paying for it. But the fact is, it's not going to be. So that private money does have to come in. The flip side of that is looking at the cost of what happens if we don't do it. And I mentioned GFI again, Green Finance Institute, because I know they're working on something looking at the increased risk of various nature-based scenarios. So if there's a significant soil erosion, if there's an animal health pandemic, if there's biodiversity loss, the cost to GDP in the UK for those sorts of scenarios. So yeah, again, that needs to be priced in, because if we don't do something, it's going to cost us even more in the long term.
Thank you.
I think there's absolutely the pertinent issue at the moment, and this year is flooding, isn't it? And flood attenuation, and the actual cost of that, not just the personal cost, but as a country, and that's an obvious opportunity, I think, there for the likes of Aviva, who pay out for flooding, to actually use the land for its best purpose. If you can provide flood attenuation on it, there should be recompense for that, because you're helping everybody.
Thanks. I'm going to leave the final word to Harvey. Is there anything else that you would like to add to this, Harvey?
I think it's important to just proceed carefully. I think, as everyone's indicated, because there's a lot of opportunities, but there's a lot of pitfalls as well. I think one of the things that is important, I guess, to me is that farmers and their managers, let's say this from my own experience on farm, is that there's a lot of challenges. The huge pressures on costs and on prices that we get for products, trade deals, the weather, and the environmental piece, which obviously is of first order importance. It is vital that it's not just done by way of regulation, and that these new revenue streams and opportunities do work, because I think that is going to be the best way of delivering those improvements. And I think just the other point is do be careful how you proceed, because one of the big features of this area is this idea of additionality, and where you've already carried out enhancements or improvements, it's very difficult sometimes to then try and monetize them through some of the schemes that we've been discussing, because it'd be considered that they're not eligible. You need to do it pursuant to the legal agreements that you've entered into, but if you've already done them, then you can't do that. So obviously tread cautiously, but I think, like any business opportunity, you've got to keep your eyes and ears open.
Thank you very much. You've sort of done my job for me, Harvey. I think in summing up there, that's really, really good and really kind of you. I think I'm going to draw it to a close there. We've had a sort of an hour and 15 minutes talking about private money for public goods. There are opportunities there then, if you're in the right place. Don't perhaps jump in with both feet. Look before you leap. Do seek advice. Don't look at it as being a panacea or a way of making money for nothing. But for the right people in the right place at the right time, I guess there are opportunities if you proceed carefully. That is going to be it for this Farmers Weekly Transition webinar. For people who are watching and would like to find out more, you can do so by visiting the Farmers Weekly Transition Hub, which is fwi.co.uk/transition. We will have more transition webinars, indeed more Farmers Weekly webinars over the coming weeks. But for now, I'm going to say thank you to our panel of experts this evening. Ben Makowiecki. I always stumble over your name, Ben, but I will keep trying.
Did it very well.
Agricultural Sustainability Director at Lloyds Bank. Harvey Davis, Solicitor in the Planning and Environment team at Thrings. Sarah Belton, founder of Nutrient Neutral. Richard Mariniak, partner at the Equilate Estate in Staffordshire and Director at Resets. And Will Strong, Commercial Sustainability Specialist at Frontier Agriculture. Thank you all for joining us this evening, and thank you to everyone who has tuned in and listened and submitted a question. And we will make this webinar available after today, so you can watch it again if you so wish, and you can also share it with your friends and family and colleagues should you wish to do so. For now, though, I'm Johan Tasker. Thank you to everybody for joining us this evening. Thank you.